Welcome to this week's market drama. We'll begin with the S&P 500, which was up 5.3% for the week. It is now up 1.3% for the year. NASDAQ was up even more, up 7.2% for the week. It is essentially flat now for the year. So what happened? Well, we had big news coming out of U.S. and China trade relations. U.S. agreed to reduce its tariff on most imports to 30%. Which includes a 20% tariff related to the battle against fentanyl and basically the 10% across products. China agreed to reduce its tariff to 10% most U.S. Goods, as well as some non-tariff trade restrictions, such as on rare earth minerals, which are used in a lot of technology products. So that gave to a huge market rally. Interest rates also went up on the news. So the S&P 500 is now back on positive territory for the year after falling 19% from all-time highs in February 19. We also had hard data coming in from a CPI and retail sales. When you look at the CPI data, headline consumer price index rose by 0.2% in April, shelter causing the majority of the monthly increase. That puts it at 2.3% year-over-year growth, which is down from March, which was at 2.4%. Core CPI, which removes like the volatile food and energy prices, rose by 0.2 or 2.8 if you look at it year over year, which essentially for both numbers, they were slightly below what the market expected, which obviously the market wants to see. Now, so there was no signs essentially of tariffs impacting the April number. When you look at what analysts expect, they do expect that the tariffs will likely exert upward pressure on core CPI starting in May, right? So the coming months are really going to be the litmus test of how much higher inflation will be as a result of the trade policy. Well, when we look at retail sales, when you remove volatile items like gas, motor vehicles, it dropped by 0.2%, demonstrating some weakness there, right? So essentially the demand on the consumer side was affected so far, but not enough to be alarming, right? Consensus estimates were for there to be some slight growth instead of that drop of 0.2, but not a huge gap yet. On the labor front, we also had initial jobless claims at 229, in line with expectations, which kind of continues this trend because later in the week we had consumer sentiment index that was weak, right? But it didn't derail the market rally because we continue to see this divergence between what we call like soft data, right, like consumer sentiment index, and then the hard data like inflation, retail sales, and that gap continues to stay in place. Meaning, soft data is much weaker than the hard data, and we will see. I do think in the next couple of months we will start to see the hard data being negatively impacted. But the market has kind of seen through this and said, yeah, we will see a soft patch because some damage was already done. But if China and the US, which are the largest trade partners, starting to cooperate and start to see some roadmap towards a more comprehensive trade policy, I think the market's kind of looking past it. So that is it for this week. Next week, we have S&P Global PMI data and home sales prices for April. That is it for this week. Stay tuned for next week.